Welcome back. You're still tuned into Power Breakfast. Let's talk about some big earnings reactions that we are expecting today. L&T posted numbers post-market close yesterday. By the way, the stock was also down around 2% when the market closed. So we have Vivek here to take us through the earnings fine print. Vivek, mixed set?
Well, absolutely right. L&T delivered a mixed set of results. So what are we looking at as far as L&T is concerned? Number one, we compare the results against our own poll, and number two, we go ahead and compare the results against the own guidance that the management has given. So number one, when you're talking about how the results fared against our expectations, revenues above the CNBC-TV18 poll, core EBITDA is slightly below, margins were a miss, and that's going to be a bit of a disappointment. Net profit too below our own poll. But let's have a look at what's actually worked for the company. The order inflow has been extremely strong. So the management, which had given a guidance of 10 to 12% order inflow growth, has actually now said that they will see order inflows of over 20% for FY24. That's a strong upgrade coming in as far as the order inflow is concerned. Remember, the management has given a revenue growth guidance of 12 to 15%. The management said that they're likely to go ahead and see high teen growth. So there is a possibility of a revenue beat through also coming in. But the core EBITDA margin, remember, they started the year saying that core EBITDA margins are expected to be at around 9%. They trimmed it to a range of 8.5% to 9% the quarter gone by. Again, another smaller downgrade coming in. They're expecting to now finish the year at 8.25 to 8.5%. So that's going to be a bit of a disappointment. Why is the margin was coming about? The legacy projects that the company continues to execute is a bit of a concern, and that is actually going ahead and being a challenge. Now, when you're talking about the order, outlook or the ordering activity, Indian market, the domestic market, expected to remain subdued for the next couple of quarters, given the pre-election code of conduct comes in. But the ordering activity, as far as Middle East is concerned, continues to remain extremely robust. So hydrocarbon segment is expected to get some more big orders even in FY24. Overall, mixed set of numbers. The margin miss is the only blip in an otherwise strong quarter, and the order inflow upgrade is something that will be taken quite positively. We spoke to the management, during the conference call that they held for media, and the management did reiterate some of the margin targets and also gave us fresh guidance for the upcoming year.
Unlike order inflow, where a couple of earlier wins or later wins can move the needle, revenue is fairly set because we know what we need to execute in the last 3 months. So my guess is, I think, as compared to 15%, we will outperform that. And just as a landing place, I think I'm assessing that to be more closer to high teens. We will do all our best to see how far we can improve, but it appears to me it will be high teens. My sense is we will be at similar levels as we close this year, and it is possible that, given the dynamic that I spoke to you about, it could fall between 8.25% to 8.5%.
All right, that is the word coming in from L&T. So it'll be interesting to see how the stock reacts to these numbers, because the numbers, like we were mentioning, are mixed, but the order inflow guidance for FY24 has been raised. We are going to get into a short break now, but on the other side, we're tracking all of the cues from the commodities market. Stay tuned.